Good morning, everybody. Just moving on to the X100 playbook, very similar format to what Nathan has discussed. In this report, we do cover off on around 105 stocks, 20 of which we have flagged as potential positive reaction candidates, 6 negative, and the balance neutral. So, that's a relatively interesting dynamic in a market where plenty are throwing stones at valuations in the face of COVID, etc., and quite telling of our overarching view, I think, as well, and certainly telling that stimulus is having its desired impact in the market landscape currently. Around 65%, as we can tell, of our X100 coverage have actually provided either formal trading or comprehensive trading updates or formal guidance in May and June. So that's a large number of stocks, and we kind of saw a lot of companies more willing to provide regular trading updates after they pulled guidance as soon as COVID kind of hit. So perhaps downside risk in our coverage is a little more diminished than this time last year. Just focusing on those 20 positive catalyst candidate stocks by their category. So those where we expect they can either beat consensus expectations or those that have formal guidance expectations, we're flagging Adairs, AFG, AP Eagers and EBOS. For those who can provide a strong trading update, articulate, a positive growth outlook, or even provide guidance, and we think they'll be few and far between. But here we nominate Acro, Adairs, Aventus, Kina, Mainstream, Max7, Pro Medicus, People Infrastructure, Superloop, and Cenex. For those where we just see emerging tailwinds or even a headwind that's starting to ease and slowly turning into a tailwind, here we have Essentia, Integer, Monash and Virtus, so a couple of sector thematics playing out there. And those that have specific catalysts, which the analyst can dig into later with you if you like, and or just an attractive valuation where it sits, we nominate Acro, Aventus and Genex. From a negative catalyst perspective, only 6 names identified there. Those with cyclical headwinds, we've nominated Bingo, Coronado and Central Petroleum. Those are at risk of missing consensus and or their guidance, Palapharma, and those at risk of a disappointing outlook or guidance commentary, Bingo and Iris. And lastly, just Nanosonics with a very stretched valuation that may struggle to live up to that level. As Nathan went through, as we head into reporting season, outlook commentary is everything. Our overarching view is that formal guidance for FY21 will be, far less this year than last time. It's an easier option for CEOs, just given how much economic uncertainty there is out there. Even if they think that they can, it's an incredibly difficult call for a board to make as stimulus measures ease. And given COVID uncertainty. Just on the stimulus, obviously we have seen that JobKeeper will now be extended post-September in a more watered-down form until the end of March 2021. So that's a really big positive for a lot of sectors out there. But the divergence of consensus estimates into 21 is even greater this year, as you would expect. Here we just call out a couple of stocks of relevance to our network where we sit materially above consensus for next year. IDP Education, AFG, Adairs, Iris, Pinnacle, Invacare, Pact Group and Super Retail Group. And conversely, where we sit materially below consensus, here I'd call out MoneyMe, Bingo, Reece, Helios, Motorcycle Holdings, Levissa, Aventus and GWA. And just on those divergences, please speak to the individual analysts for reasons for that. So if we think out further than short term, share price responses, as is our job, and we focus down into the stocks we really have conviction in on a medium and long term basis, and they are quite similar to the strategy team's best ideas publication each month, but a few changes there given intra-month moves more recently. Just running through those 11 names, and again the analysts can dig into them further with you, but they should be well known. Calling out Adairs, Aventus, Bapcor, Costa Group, Credit Corp, Hub24, People Infrastructure, PWR Holdings, Superloop, Cenex and Zip. Just as is always the case when we run through these books or these playbooks, there's so many stocks to think about, too many, I know Chris Brown will be saying, but if you think about from the X100s, the ones that are in both lists, so a key pick, but also have a near-term catalyst, so extra, conviction from the team. Here you just point out People Infrastructure, Adairs, Aventus, Cenex and Superloop. So, just in summary, three great publications coming out this morning, 160 stocks covered off, 32 positive reaction candidates, 15 negative, and plenty of key picks there for you to choose your own adventure. As Tangi mentioned, August will be one of the most interesting reporting seasons we have seen in some time. We will all be learning new things through this period. Stimulus is having its desired impact and bolstering plenty of industries currently, but we still think outlook commentary will be reasonably cautious on the economic landscape. Balance sheets and liquidity will be scrutinised heavily, and we think management teams will also focus on this. So we also think working capital positions are going to be extremely important for us to focus on, payables, receivables, and all important inventory positions. Dividends obviously under pressure. There may be some, shift towards preserving liquidity instead of paying them, but more defensive businesses and the resources companies will pay them. So if you're looking for dividends, they're the places to look. Please watch out for cost-cutting programs. I think we're kind of missing this theme. I can't remember how many CEOs I've spoken to, but every single one is you never waste a crisis to really examine your business and have a look at your cost base, and I think that will be a major theme over the next 12 months and may well surprise the market in how that can bolster any softness that comes through at the top line. So that's the overarching view from research heading into reporting season. We hope that is helpful, but judging by the overall positive versus negative, candidates we've listed, hopefully we do have a reasonably constructive view on the overall reporting season and the stocks we cover.